Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are looking at the top 3 best growth stocks to buy right now that are fantastic long-term investing opportunities. And those long-term opportunities are going to be found in Zoom, Twilio, and Netflix. These companies are going to provide fantastic long-term growth as well as consistent, stable stock price appreciation as time goes on. I will also tell you which of these companies that I am personally invested in, and one of these companies which I actually am not invested in, and I will provide you the reason why that is. These 3 stocks have pulled back recently due to multiple macroeconomic factors, such as the Federal Reserve increasing interest rates, bond yields going up, as well as overall economic uncertainty with interest rates as well as overall inflation on top of job reports. But with that being said, let's dive into Zoom Video Communications, ticker symbol ZM, Twilio, ticker symbol TWLO, and Netflix, ticker symbol NFLX. And if you don't know what any of these businesses do, don't worry, I will briefly explain what these do. Just know that these could be fantastic growth stocks to invest into right now, especially because they have pulled back recently, which gives us a fantastic buying opportunity. We're going to start off with Zoom Video Communications, ticker symbol ZM. And Zoom is a video conferencing platform that is set to replace in-person meetings with customers. Zoom is very similar to Skype or FaceTiming someone. It's basically just a video conferencing or a video communications platform that absolutely exploded during the lockdowns. You can see on the stock chart that the stock price exploded up, and ever since then it has been trailing downwards. But now the stock price is starting to look very nice because analysts think the stock could more than quadruple in price within the next 12 months. This means that you could literally double your money in the span of 3 to 4 months, which is fantastic news. Currently, Zoom, ticker symbol ZM, trades for $142 per share. The low-end price estimate, according to analysts, is $200. The average price consensus among analysts is $292, and the high-end price target for the stock is $643. Now, before I go into Zoom, I personally am not invested in Zoom. I actually think that Microsoft Teams will usurp Zoom, so that's why I actually moved my position after making a load of money from Zoom right here. I actually took these profits and put them into a very stable company and a blue chip company such as Microsoft. Anyway, this doesn't mean that Zoom necessarily is a bad investment right now. It just means that I exited a position because I had a lot of risk and I didn't want to risk the stock downtrending, which it actually did. But I might re-enter back into Zoom because the stock price is so low right now. It gives me a fantastic buying opportunity. But to determine if it is right for your portfolio, let's see what Zoom has in store for us. So Zoom continues to grow its customer count despite its stock price falling, and because it's growing its customer count, that means their revenues and cash flows are also increasing at a very impressive rate. Zoom also launched Zoom Phone, which has been a huge hit among their customers. Zoom's stock price currently trades at around 11 times their trailing sales, which is not too expensive, especially for a growth stock as innovative as Zoom is. Now, during the lockdowns, Zoom increased their revenues by around 50% year over year, so we are not anticipated to see revenue growth rate like this again. However, analysts project that a 25% growth rate over the next decade is very possible. And if you don't know, a 25% CAGR for revenues is absolutely insane, and it's very phenomenal. So as long as no one usurps Zoom, Zoom could be a fantastic growth stock to get, especially right now, because the stock has trended down so much, it's a fantastic buying opportunity. We could be looking at a $643 stock, which we could buy for $142. So to me, this is a fantastic deal right now. Now, this doesn't mean that Zoom can't continue to trend down in the short term. It just means in the long term, analysts are very bullish on this particular company. Now, I want to talk about Twilio, ticker symbol TWLO, and they are a communications and technology company. The reason that Twilio stock is falling is that the company issued third quarter results and arrived at underwhelming guidance for their future projections. However, this is only short term. Investors got scared and they started to pull their money out. However, very similar to Zoom, despite the sell-off of the stock has fantastic growth capabilities, especially if we consult analysts. And this is what I mean. The current stock price trades for $197 per share. The low-end estimate for the stock is $240. The average price consensus is $367, and the high-end price prediction for the next 12 months is $550. This is absolutely an insane opportunity to, again, more than double our money in a very short time frame. Twilio software basically basically makes it very easy for their clients to set up automated customer service channels, and they have a fantastic business model which promises long-term growth for both revenues and earnings. The stock for this communications specialist has fallen around 58%, and that's why I am extremely bullish on this company, and I am still invested into TWLO stock because I think the future for this company is very bright. Twilio also has very strong customers. For instance, they serve about 250,000 customers every single year, and they have very well-known customers such as Uber, Airbnb, Nike, and Shopify, just to name a few. They have other very large customers, but I just wanted to highlight those four for now. But overall, they have around 250,000 customers, and these customers are extremely impressed with Twilio's overall capabilities and their technologies. Twilio has also been able to scale their revenues by adding more clients because they are consistently adding new customers and new clients to their platforms. This in turn has caused their sales growth to increase over the long term, and it's projected that in the future their sales growth are anticipated to start ramping up again very impressively. However, I do want to add that this business is currently not a profitable company. However, it is projected to become profitable in the next few years or so. Also, I've looked into Twilio's balance sheet, and they have very strong cash reserves and short-term investments. This means that they don't need to take on debt to reinvest and grow their company. They can literally just reach into the cash or short-term cash equivalents, such as their short-term liquidity in their balance sheet, and they can use this to either buy other companies through acquisitions, or they can use it to increase their research and development or their marketing efforts, which will in turn add new clients, which will reflect very positively in their revenues, which will help them generate earnings, which will have them deliver earnings beats, which will then increase the overall stock price. So overall, Twilio is one of my favorite stocks to invest in right now, and investors have a fantastic buying opportunity because the stock price has fallen so much as of late. So now we are going to be talking about our last and final stock, which is Netflix. And if you didn't know, Netflix is a streaming platform for various movies and TV shows. The ticker symbol for Netflix is NFLX. The current stock price is $405 per share. The low-end price target for the stock is $330 per share, so we could see the stock price fall down to below $330. However, the average price consensus among analysts is $514, and the high-end price target for the next 12 months is $735. Again, this gives investors a fantastic opportunity to grow their money very safely because to me, Netflix is a very good company. Netflix has been known to scale their subscriber counts, and that generates them fantastic revenues, which is why this is an excellent, in my opinion, it's an excellent buying opportunity, and this is an excellent long-term stock to own. Netflix is genius because they also make a lot of their own series. So the more customers they get that subscribe for a fee, that generates them revenues, and they use these revenues to spend and make more contents for their subscribers. So this is just a fantastic wheel that just keeps going over and over and over. New subscribers subscribe, give them revenues, they use the revenues to make more shows, that gives them more subscribers, which gives them more revenues, which helps them make more shows, and it just continuously loops around and around and around. So this business model is absolutely fantastic. They also have extraordinary revenues. For instance, in the year of 2021, their revenues came in at almost $30 billion, which is a substantial increase from the revenues that they brought in 2020, which was around $4.7 billion. So Netflix is scaling incredibly quickly. Netflix has also increased their operating margin by leaps and bounds. For instance, their profit margin has increased from 7.2% all the way up to 20.9%, which is absolutely mind-blowing, and it just shows how scalable this company truly is. As of December 31st, Netflix also had around 222 million subscribers, which represented a 9% increase from the same time from the year prior. So the company is consistently growing. However, recently management has given new guidance and told investors that their subscriber growth is actually set to fall some. For instance, their subscriber count is supposed to only come in at around 2.5 million new subscribers coming in for the first quarter. And the reason this is bad news is because on average, Netflix rakes in around 8.4 million new subscribers every quarter. So this is one of the reasons why the NFLX stock has fallen recently, which to me just gives us a better buying opportunity because again, they have a fantastic overall addressable market, they have a fantastic business model, their fundamentals are solid, and Netflix continues to grow their overall subscriber counts, which gives them more revenues, and this generates them operating profits. So overall, Netflix, Zoom, and Twilio are fantastic long-term growth stocks to buy right now that have pulled back way too drastically, and this is why analysts think that these stocks could more than recover in the year of 2022 and beyond. But I would love to hear your thoughts about Twilio, Netflix, and Zoom Communications. Comment your thoughts down below, subscribe if you are new, smash that like button, and I will see you in the next YT video.